Hey guys, we're going to look at a couple of buy signals, kind of when you want to get into a stock, and kind of different patterns that you're looking for when you want to buy going long. But before we start, go ahead and like and subscribe. Also, join the Patreon, join the mid-level, and I'm going to be in there all the time answering questions about charting, trading, day trading, long-term trading, whatever you guys want. I'm in there exclusively. I'm going to talk about my trades that I'm making. You can ask me literally any question you have, from the most basic thing to the most advanced things, and I'll be in there on a daily basis. And yeah, let's get going. But go ahead and like and subscribe. So the first thing I want to talk about are what are called engulfing candlesticks. These are the most important things that you're going to want to look for when adding to a position, especially getting in for the first time and really going heavy on a stock that is moving in the upward direction. So what is an engulfing candlestick? So right here is what is called an engulfing candlestick. Basically, you have a candlestick that is going up. Let's say this would be green, and the following day is going to be bigger than that candlestick, and it kind of engulfs it. It kind of swallows it. The next day, same thing. Bigger, a big thick candlestick with no wicks, kind of swallowing the previous day. So let's look at a chart down here, and we can see some good engulfing candlesticks. You had a pretty nice day right here, and the following day you had a big green candlestick that kind of took up the whole thing. So if you had one share on here, your tracker share, and you were kind of just waiting, you did have an uptrend, the price was moving up on you, but we never really got a good buy signal, which is saying that a lot of money is coming into the stock, a lot of confidence is coming into the upward direction until this couple of days. So a big thing about trading is you need to be patient. Just because the stock price is moving up on you doesn't mean that it's going to stay there. Don't worry about the quote unquote, I'm missing this. There's always going to be an opportunity. There's so many stocks out there. So we want to buy with confidence rather than chasing price up and down. So that's an engulfing candlestick. Now, we'll talk about this in another video, but you got a snapback, no big deal. But you can see these engulfing candlesticks. Here's another day I would have added. Of course, here's another day. This is a perfect engulfing candlestick, no wick at all. Here you had a little bit of a candlestick with a wick. We don't want to add that day. Following day, boom. So these are engulfing candlesticks. We want to look for these when we're adding to positions. These give us the most confidence to add. Next thing we're going to talk about are W formations with higher lows. And W formations are going to be on your line chart. And this is what really gives you confidence to say, we're building a new base, let's go to that next level. We're building another base, let's go to that next level. So there are three types of W's. You have your normal W's that the levels are kind of all the same. You're not really getting any ups and downs, anything like that. You have W's where we kind of get the right side of the W is lower than the left side. And these are good for when you're going short, but we're not going to talk about that right now. We're going to do a whole series on shorting. And then the best kind of W we want to look for are ones where the right side of the W's are higher than the left. Now, the reason we want to look at these ones is because, let me draw that again. It kind of builds new bases for you. So these are what are called higher lows. So when you have a stock, moves up, goes down here, creates a base, the next time the stock runs up on you and pulls back, you're creating a low, a new low that was higher than this low. So these are what are called higher lows. The great thing about these is that we are creating new support levels each time. So every time that the stock kind of pulls back on you, it kind of hits this support level and doesn't allow it to kind of drop down to this level. So we're creating nice support levels, and that is why we really like these kind of W formations. So let's look at this chart. You got some great movement to the upside. Of course, our trend is up, but you have the base of a W right here and a higher low and another higher low and another higher low. And you can see how as the trend moves up, as the stock moves up, the price moves up, obviously, and we're making money. This is what you want to look for. You always want to pull up your line chart in addition to your candles and kind of go through and look for these higher lows. W's are wonderful. And how are W's created? W's with the right side higher than the left are created with the stock price pulling back. So when we get these stock prices that pull back on us, it's not necessarily a bad thing. I don't want a stock that looks like this, because just as easy as that stock ran up, that stock can pull right back down because there's no support level in there. It was just, this is what we call a flagpole pattern. I'll talk about those later also, but we want the stock price to pull back, which are called snapbacks. Also another video coming soon. So let's go to the next thing, and that's consolidation. Consolidation is when we're getting that W formate, those W patterns that are kind of just even throughout. The stock hasn't really chosen a direction. We're waiting to see, is the money going to come in to go long? Is the money coming to go short? Or is it just going to sit there and do nothing? So with Apple right here, this is a great example of just the stock consolidating. It's just kind of going up and down, bouncing between two prices, not really doing anything, waiting for something to happen. It could be waiting for big news. It could be waiting for earnings. It could be waiting for, we just don't have volume in it for some time. And this was quite some time. This is probably a little 2-month period. But when stocks consolidate, this is the time that we need to be patient and just wait for things, and don't try to force things to happen. Let them develop, and then we go on the attack. So those are the 3 things that we're going to cover today. Remember, like and subscribe to the video, join the Patreon, join that middle tier, and ask me any charting questions you have, and we'll go from there. Take care, guys.